Consumer inflation has eased again. The CPI print for September has come in at 3.8%. This is the fourth consecutive month of decline and marks the lowest level since March 2021. The slowdown was largely due to softer transport inflation, specifically lower fuel prices. That category entered deflationary territory for the first time in over a year. Famous Brands has posted higher half-year profit. The owner of Wimpy Steers and Fisherways has reported a near 10% rise in headline earnings and lifted its dividend by 9%. The restaurant group says those results were due to a prudent cost base, despite its operating profit margins being impacted by lower volumes and overhead cost pressures. The firm added that its brand's performance continues to be under pressure as lower consumer spending dampened demand, and that impact flowed through to its manufacturing and logistics results. But Famous Brands is cautiously optimistic heading into the second half of the year, saying a stronger rand and interest rate cuts may provide scope for a more positive consumer outlook. EOH is eyeing a rebrand. It wants to change its name to IOCO and will ask shareholders to approve that at the next AGM. That news accompanied the release of its year-end results, which showed an improved performance. The technology groups narrowed its loss per share by 23%. EOH says it experienced revenue growth from international and infrastructure services businesses, with the digital revenue generation remaining robust. But its connected industrial ecosystems and digital business solutions came under some pressure during the period. Nampak's lightening its portfolio. Africa's largest packaging company is selling its Zimbabwe unit for $25 million. Nampak says the move forms part of its asset disposal plan. It's added that offloading this unit will significantly help reduce its net debt and eliminate the associated risk and volatility of Zimbabwe's economy. Alex Forbes Investments CEO Anna Lepal has resigned. A letter to clients says Lepal's notice period commences next month and that Group CEO Davi de Villiers will act in the role until her replacement is found. The notification does not go into detail on the reasons behind Lepal's departure, having taken office just more than 2 years ago. In company news further afield, Volvo has beat third-quarter operating profit expectations, but also cut its full-year sales growth forecast. This as an industry slowdown spreads to higher-end cars. Here's more detail in this package report.
Swedish carmaker Volvo beat expectations on third-quarter operating profit, but cut its full-year sales growth forecast. That's as a slowdown in the industry spreads to higher-end cars. Volvo is banking on its new electric models, the EX30 and EX90 SUVs, to become major sellers. But general demand for EVs has weakened in the last year, due in part to a lack of affordable models and the slow rollout of charging points. Adding to the pressure is competition from lower-priced Chinese models, with automakers also bracing for the effects of European tariffs on EVs made in China. On this basis, investors are holding their breath to see if Volvo's sales aims can be achieved. Volvo said it now expects its retail sales to rise by up to 8% this year, down from a July forecast of up to 15% growth. The company has in the past been confident that demand weakness was primarily hitting the mass market. But its CEO, Jim Rowan, said it was now affecting the premium market, where Volvo's cars are positioned. Like others, Volvo last month stepped back from its ambitions for electrification, opting to continue selling new hybrids for longer than planned. It also scaled down its profit margin goal, aiming to outgrow the premium car market, rather than give a specific sales target, as before.
And Starbucks has suspended its forecast through the next fiscal year. This as new CEO Brian Niccol looks to turn around the coffee giant struggling with falling demand for its drinks. There's more in this report.
Starbucks has suspended its 2025 forecast as CEO Brian Niccol works to fix the global coffee chain. In preliminary results on Tuesday, it also posted another quarterly slump in sales, with fewer people buying its pricey drinks. Nichols said Starbucks needs to change its strategy to grow again, and that's the goal of his Back to Starbucks plan. He also said the company will make the menu simpler and fix their prices. Tuesday's numbers showed sales, revenue, and profit were down because of low demand in the US. Its chief financial officer said that even with increased spending, they couldn't stop a drop in customer visits and are working on a plan to improve, but warned it would take time. Starbucks boosted its quarterly dividend to 61 cents per share to reassure investors about its turnaround plan. As part of that plan, Nichols said they want to change marketing and focus on all customers, not just Starbucks Rewards members. In his first speech as CEO last month, Nichols said he wants to make Starbucks a community coffee house again in the US. His clean slate approach is similar to what Nike CEO Elliott Hill plans to do, as Nike had also faced declining sales under its previous leader. Shares have risen 28% since Nichols was named CEO in a surprise move in August. However, it fell around 4 percentage points in after-hours trade. Starbucks plans to release its final quarterly earnings next week.